Hello and good afternoon. Welcome to another episode of the Markets at a Grand series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be talking about trading US equity indices at the New York Session Open. We'll also be talking about other key market highlights, including the just released Canadian inflation data. We'll be trying to understand how that data will be impacting the markets. And at the same time, we'll talk about gold, where gold might be headed, potential trade setups. And at the same time, we will also focus on the current sell-off happening in oil prices. And once we cover that, hopefully everyone will approach the markets from an informed perspective. So as usual, I would like to begin with a disclaimer that this session is not investment advice. It is not a recommendation to trade. So you should always do your own research, do your own due diligence, and practice proper risk management. So with that beside us, we can start right away. And I'll be jumping straight into the economic calendar. So just give me a second. So I'm hoping everyone can see my screen. So once you join in, kindly say hi on the live comment section. This should confirm that everything is working just fine. All right, let's get things started. So I can see some comments on the comment section here. Good afternoon, Robert Cavale. Emmanuel Muhoro, thank you for joining. Doneza Jack, thank you for joining. So we are looking at the economic calendar. In this case, it's a little bit different. If you've been attending the sessions, then you are most likely used to the Forex Factory economic calendar. I'm using the trading economics calendar for a good reason, mainly because it's more detailed, especially on the Canadian inflation report compared to the Forex Factory website. Just to give you a quick illustration, this is the Forex Factory website. So let me refresh to get the update. So as you can see, for the Canadian inflation report, there is a CPI month over month, median CPI, trimmed CPI, and common CPI. But then if you go to the trading economics calendar, you'll notice that it's more details. There's inflation rate year over year, which is not present on the other side. There's core inflation rate year over year. Yes, there's month over month. Core inflation rate month over month, median CPI year over year, and CPI trimmed mean year over year. So here you are able to get more detailed inflation report. So as of the release this afternoon, we were expecting that inflation in the month of September in Canada may have dropped to 1.8%, down from 2% in August, but the actual report came in at 1.6%. So 1.6 basically means that inflation dropped more than expected, and this is quite positive for the Bank of Canada, which has spent the last 2 years trying to narrow down on inflation, looking to make sure that inflation drops towards the central bank target, which is around 2%. So now it's below 2%, which is a positive outcome for the Bank of Canada. So core inflation, which is basically a measure of consumer price index, but excluding volatile food and energy prices, that's why it's called core inflation rate, dropped to 1.6%. Previous was 1.5, so it's a slight uptick. Then month over month, we had a drop of negative 0.4. This is a good and a big drop from the previous one. Core inflation month over month did not have much of a change, 0.0%. So this means that the basket of commodities or basically consumer products that are estimated in terms of price between the month of August and September did not change in price. So that's why we are seeing 0.0%. So CPI median, 2.3%, same as previous reading and same as expectation. And for CPI trimmed mean year over year remained at the same level of 2.4% as the previous reading, but also below the forecast of 2.5%. So looking at the inflation report, just give me a sec. Looking for the updated number. Yes. So still on the same website. So the annual inflation rate in Canada fell to 1.6% in September of 2024 from 2% in the previous month, the lowest since February 2021, and well below the market forecast or consensus of 1.9%. It was the second consecutive period that CPI inflation was under the Bank of Canada's target of 2%, raising bets that Canada's monetary authority is due to extend its cutting cycle. And that's the most important part of the report. So now that we have seen inflation has dropped significantly and that the Bank of Canada had jacked up rates in order to control inflation, and as you can see from this page, this is how they moved interest rates from February 2022, where the rate was 0.25%, and they kept hiking until they got to a high of 5%. So this 5% interest rate is quite restrictive, basically pulls money out of the system, leading to prices slowing down. So after inflation got close to 2%, the Bank of Canada started cutting rates. And the first cut happened in the month of June, where they cut by 25 basis points. Then on the next meeting in July, they cut by another 25 basis points. And on the next meeting in September, they cut by another 25 basis points. So those are 3 consecutive rate cuts happening in the last 4 months. So now that inflation has dropped further to 1.6%, it increases confidence that the Bank of Canada will continue cutting rates and moving them lower. So whenever a central bank is hiking interest rates, it basically makes the currency more scarce, and as a result, the currency strengthens. So the opposite is also true. So as the central bank now cuts interest rates further downwards, the currency weakens because capital becomes cheap within the economy. So in this case, the overall expectation in the market is for the Canadian dollar to continue weakening against other currencies. So on top of that, we also have the oil markets, which are down about 5% since last night, mainly as a result of an assurance that was given by Israel. So we know that there has been a conflict between Iran and Israel. Iran struck Israel last month, and Israel has been talking about retaliation and hitting Iran's oil infrastructure. So last night there was a clarification that they are no longer going to hit the oil infrastructure. So they said if they do a response, it will be targeted to military sites or military targets. So in that case, indemnifying the oil sector. So this basically means that if there is no scare about Iran's oil being struck, then the rally that was there or the bets that were there that could disrupt the supply of oil in the market is no longer there, and that's why we are seeing a big sell-off. So Canada being Canada having a commodity currency, that is the Canadian dollar, it tends to have a positive correlation with oil. So when oil is going down, most likely you'll see the Canadian dollar weakening, and when oil is going up, also the Canadian dollar tends to strengthen. So those key factors are defining the trend in the Canadian dollar, and we'll be looking at the Canadian dollar pairs later as we continue with this presentation. So if you have any questions arising from the presentation, feel free to type them in the comment section, and these will confirm, and I will be responding to those questions on the go. So I can see Peter Kihenjo has joined. Thank you for joining. There's Jose. Thank you for joining from X. A good question from Peter Bramwell. Hey, do you trade on behalf? No, I do not trade on behalf of anyone. Let's proceed with the next item, which is basically the topic for today's session. And this is US indices at the New York Open. So we know that when we talk about indices, they are basically weighted average of the stocks represented. So if it's the S&P 500, it's basically a weighted average of the top 500 companies in the US. Currently, it's 503. So if you talk of the Dow Jones, it's the industrial sector, top 30 companies, and for the tech index, or what we call the Nasdaq 100 index, basically shows a weighted average of the top 100 tech companies in the US. So these indices have been on a roll. They have made quite a great return for the year, that is so far year to date. With the Dow Jones hitting a new all-time high yesterday, the SP 500 hitting a new all-time high, and the Nasdaq 100 index lagging behind. Nasdaq hasn't hit a new all-time high, and we should be expecting to see a market reaction today, and that should be happening at 4:30, which is about 14 minutes from now. So key observation is that when the market opens, there is usually extreme volatility. So not a great idea to be entering the market as of that moment, because you can get those small spikes that can kick your stop loss within a short period. So it's more advisable to wait a little bit, and once the volatility has slowed down, then you look for a potential trading opportunity. So let's get to some technical analysis and try to understand the current or the prevailing market action. So I'll be starting with oil. Oil, after the announcement by Israel last night, this has been the price action. So it was about an hour to midnight. So we had this big drop happening. So since then, you can see that the oil prices were down about 5.49%. And based on the current price action level, it's down about 4.4%, which is still considered a big sell-off in oil prices. So from the daily time frame, this is how it looks like. We had this strong resistance here. The market rallied to this trend line. This was back in April. And since then, the market has been unable to go back to this trend line. So instead, it formed another trend line, which means that the bearish momentum is only getting stronger. And if you pay respect to the most recent high, then you can see that the bearish momentum is only getting stronger from this trend line to this and now to this other one. And this is where we had the market rejecting higher prices at around $80.928 per barrel. So from the 4-hour chart, you can see that we had, I would say, 4 straight weeks of strong market rally in Brent oil. But since hitting this resistance, last week we had a big drop. Market bounced strongly from this area here. So notice the coincidence of this area here working as the support of last week. And now, this week, market opens on Monday with a gap. We were expecting the market would fill this gap here, but that didn't play out as the market had a big sell-off last night. And today being Tuesday, we are seeing a continuation of the same, which implies that we should be expecting some further bearish momentum all the way down to around this area here. So if you observe the last time the market was around this area here, there was a lot of support coming in, or buyers coming in and purchasing at this price level. So in this case, from what we are looking at, it's a big sell-off, and the market could extend this sell-off to around $71.372 per barrel. So on the other hand, when you look at other markets that we just discussed, we will be starting with the Canadian dollar pairs. So let's check the USD card currency pair. And as you can see, there was a strong rally at the announcement of the CPI report, which happened a few minutes ago. And now you can see that the market is pulling back downwards. And of course, this is important to be looking for opportunities at value areas. So notice that this has been a long-term trend. So if you want to count the number of days that the USD card has been moving higher and higher. So from this point here, all the days have been green. So 2.4% rally within 9 consecutive trading sessions. So there's still more room for upside potential. We already hit our target, which we had talked about yesterday at 1.38307. And now if we break that level, then the potential is that the market moves to either this area here, and of course, these other resistance. So 1.3888 and 1.39459 seems like likely targets. But now, owing to the fact that this area here was a resistance level, and the market grabbed some liquidity here before pulling back downwards, then the idea is to wait for the pullback and look for entries facing the bullish direction. So in this case, if you use a much smaller time frame, let's say the 15 minutes chart, you can see that the market has been finding value areas along this trend line, and there's quite a number of instances you can observe here. There's this area here, there's also this area here, which was a gap at market open. There was this strong sell-off, which was rejected immediately. And of course, there's this area here, which was more of a range, and eventually the market found bullish momentum. So in this case, the overall expectation is perhaps the market hitting this area here, and then we look for entries around this area in the direction of the trend, which is bullish. But it's subject to confirmation. So it's one of those markets where you have to wait and then observe. And if something happens around this area that indicates a bounce, then that might present an opportunity where the market will be expected to trade higher. So that's for the US dollar trading against the Canadian dollar. So other pairs with the Canadian dollar are also quite similar. So in this case, we're also expecting the Canadian dollar to weaken against the Japanese yen. So yes, there was a pretty strong support around this area here. So from what we are seeing here is the overall market reaction. There was a big sell-off and immediately the market reversed. So we'll still be looking for short selling opportunities, perhaps maybe even from a retest of this trend line here, or even the day's high. So overall, it seems like the market was trading in this kind of formation, meaning that the overall direction for Friday and Monday was bullish for CAD JPY. But then after breaking, retesting, we are seeing a continuation of this bearish momentum. And in this case, at the announcement of the news earlier today, we saw the market bouncing strongly from here, though I highly doubt there will be a strong rally in the Canadian dollar, given the overall expectation that the Bank of Canada will be looking to cut rates further, which is likely going to lead to the currency pair moving further downwards. So also, you have to be aware of the fact that this is also a trend line. So the market could potentially retest that trend line before moving further downwards. So we could be seeing a potential move along these areas here, but the idea is to look for a short selling opportunity, not a buy trade. So fast forward to US equity indices. I'll be focusing on the top 4 equity indices with quite a big breakout happening in the Russell 2000 index. So this is something we have been tracking. So it was moving along this pattern here for 3 consecutive weeks before it broke out towards the upper side on Friday. So after the strong rally, notice how on Monday we continued extending the rally. There was a pullback and a continuation. And today the idea is still the same, to capture something similar to this. If we get this and then the market makes a strong rally, then the idea is to go for the buy side potential rather than the short side. So normally with this as a book pattern, it's important to notice some key levels here, like this one, which was previously acting as a resistance area. And now it's more meaningful to understand that the market may struggle to break such a level. So in this case, it struggled to break here yesterday, eventually broke to the upper side, and now we are looking at what looks like a retest. So if this is a successful retest, then it means that there's a likelihood that the Russell now extends to 2,280 price action level. So from the 1 hour chart, this is how it looks like. So I would have to zoom out to visualize the target area, which is around 2,280. So SP 500 closed on a very strong rally, a new all-time high yesterday. And today, the market has been quite sluggish. But now, as we go into the New York session, it seems like we are getting a very familiar pattern here. Notice what happened here on Friday. Then on Monday, the market picks up and makes a strong rally. Then we get a very familiar pattern here, a slight pullback, and now we are looking to extend the rally into the New York session. So when the market is at an all-time high, we don't have candlesticks on the left to estimate the rally. So perhaps we might even use the previous leg and then perhaps a proportion of it, such that, for instance, if this is the move that we experienced here on Monday, if we were to get a similar move here, then it would likely lead to a price action level around 59.16 price level. So there's still some good positivity in the market, especially after the Fed cut rates by 50 basis points. We know we are a few days to the US November 5 elections. And of course, the next Fed rate decision will be 2 days later on the 7th of November. And with all the expectation that the Fed will continue cutting rates, the market is taking this positively, and we are getting some good run on the bullish momentum. So the Dow Jones also closed at a new all-time high yesterday. So if you look at the H1 chart, we have had quite a successful pullback. And as a person who enjoys riding a trend, these pullbacks tend to be golden. So anytime you see this on a very strong trend, then it presents a nice entry opportunity to continue riding the trend. So it has happened several times. Notice the pullback here, and then the extension of the trend from this point all the way up. And now we are on another cycle where the market is pulling back downwards, and we will be looking for signs of bullish entry so that we can look for bullish positions. So strong trends tend to present good opportunities. And in this case, we are looking at a classic breakout from a range. This was the range here. So the market stayed within the range for about 3 weeks before making a breakout towards the upper side. And since the breakout, there was a retest, continuation, and now the market is only simply extending the rally. So some further upside potentials is expected. And finally, for the NASDAQ, you can see it had the biggest sell-off among the top equity indices, down about 16.87%. And now it has rallied from this bottom here, and so far it's up 18.65%. And this is from the 7th of August. So now what we are looking at here is a market that is looking to form a new all-time high. So it just needs to make a small rally from here. This should be about 1.49% before you see a new all-time high. And I'm quite bullish on the NASDAQ. So from what we are seeing here, it's something that we had analyzed previously. So we had seen this ascending triangle where the market was facing a very strong block of resistance, eventually managed to break out yesterday, pulled back and continued. And today it seems likely that we should be seeing some further upside potential happening at the New York Open, which happens in the next 1 minute. So as I mentioned, a key observation is that at market open, you will notice an increased or heightened level of volatility, and this is normal, mainly because banks tend to trade stocks in aftermarket and pre-market sessions. So during that period, when the market opens, there's this kind of rebalancing when the market is trying to figure out a direction or an equivalent valuation. So in this case, not the best time to be looking for an entry. So you'll see this happening almost every other day. So that was just 1 minute. Should not worry you. Just wait for the volatility to die out. It usually takes about 15 minutes. And from there, you can see a potential direction for the NASDAQ. So for now, this is what we are experiencing. Of course, in 15 minutes, you will be able to tell the direction that the market is taking. So also, the volatility is not just in the NASDAQ. If you go to the Dow, you check the 1 minute chart, this is kind of a usual market reaction at open, so not the best point of entry. So usually chill it out and wait until you have a direction. And of course, even for the SP500, you'll also notice this kind of activity. The spreads tend to be wider during the market open, but in 15 minutes, you realize that things normalize and markets start moving normally. So kindly give it some time, and then once the opportunities present themselves, then you take advantage of that. So I know everyone's favorite here is gold. Might not be everyone. So gold was trapped in this range, I would say for 2 weeks, pulling back downwards. And this is not new with gold. So if you look at this, sorry, trying to show you something else that happened with gold. So I'll be using a thicker line for visibility. So notice here that gold stayed for 3.5 weeks before making an eventual breakout. So in this case, it's almost 3 weeks when gold was trading in this direction before making an eventual breakout towards the upper side. So to visualize this properly, you go to the 1 minute time frame. So this is the price action that we had for the 3 weeks. Eventually a breakout and a retest was confirmed here, which led to a very strong rally here. Then a pullback, which happened yesterday, and further extension of the pullback to the trend line, followed by a nice bounce towards the upper side, which implies that in this case, we have a double retest, and the chances of gold making a rally and forming a new all-time high are increasingly high, and there's a good likelihood that gold will rally to a new all-time high to around 2684, and this seems like a pretty good setup for me based on the price action we are seeing here. So this price action where the market was trying to reverse, and now at market open is attempting to pump towards the upper side, seems like a likely bulls winning in this momentum game for the day. So since the market opened in the morning, you can see there was a big drop, a strong rally, some sideways momentum here, and now as we enter the New York session, there's a good likelihood that you'll be seeing a pump, especially considering that the dollar index is currently pretty weak after going for a couple of days on a bullish momentum. So the dollar index literally moved from 99.831 all the way to 103. This was 103.111, and since then you can see that today's price action with an attempt to form a new high, we did not break yesterday's high, and the dollar index seems to be moving further back downwards. So a weak dollar index is quite positive for gold. So we expect to see some further downside momentum. So the only downside risk is that if potentially we happen to see a strike on Iran by Israel, the dollar index tends to serve as a good safe haven. So that could pump the dollar index higher. But then if that doesn't happen today, then it's more likely that the dollar will continue weakening for the rest of the session. So for majors, that is major currency pairs, you can see that the pound USD was able to finally break outside of this. So we did some analysis on this, and we noticed that the market is now unable to form a new low below the low that we experienced here. So since then, market has really struggled to form a new low, and eventually there was a clean break towards the upper side. So in such a pattern, we always try to target the base of the pattern. The pattern started here. So in this case, a strong rally should be expected to reasonably get to this area around 1.31338. So for Euro USD, while the dollar is weak and the euro is attempting to make a comeback, we already had this double top formation, which indicated a weakness in the bullish trend, and now we're expecting some further downside momentum, especially considering that the ECB has much lower interest rates and is expected to continue cutting faster than the Fed. So in this case, there is an overall expectation that this bearish momentum eventually extends to 1.07821. And of course, we have to observe some of these areas here, which might act as temporary support. So the market might struggle breaking below that area for a while, but the overall expectation is that the market keeps going downwards and eventually gets to around this area, 1.07821. So the UK stock market index, it's not doing so well. So after hitting a major resistance area here, you might notice the number of times the market has rejected that area. There was a big sell-off on Friday. Monday was mostly sideways. And today, being Tuesday, we are seeing an extension of the bearish momentum. So here, the overall expectation is quite short-term, that the market at least hits this support area here around 8,236. So this is the area we are looking as a potential extension of the current bearish momentum happening in the FTSE 100 index or the UK 100. So pound yen still struggling. We managed to capture a couple of trades. So anytime there was a pullback along the trend line, we looked at buying and targeting the resistance here. And now, as the volatility dies out, notice how initially the moves were pretty big and they keep getting smaller over time. But the market is more and more insisting on breaking this particular trend line at 195.584. And there's a likelihood that eventually the market will break. So notice every time the market pulls back downwards, buyers are not waiting for us to get to the previous low. They are buying at an even higher price, buying here, buying here, buying here. And the resistance seems to be the same. Of course, the higher the number of times resistance level has been tested, the higher the likelihood that it will be broken. So in this case, the key idea is still the same as yesterday, to observe and wait for when the market breaks out, which might indicate a potential rally in pound yen. So as for the Asian pairs, they seem to be moving sideways. I remember the analysis here was when we see a breakout to the lower side, we start looking for bearish positions. But in such a case where you see that the candlesticks are increasingly smaller and smaller, then it makes more sense to hold and wait for strong momentum candlesticks. So the idea is still the same. If there's a breakout, then we go with it. If there's no breakout, then we chill and wait for the eventual breakout. So for now, since it seems likely that the dollar is doing badly, it's not doing really well. So a bounce from this area towards the upper trend line might be the only available opportunity in AUD/USD, as long as the dollar remains weak and gold continues rallying, where there is a slight correlation between the Australian dollar and gold, a positive correlation. So in this case, as gold continues pumping, we could be seeing the Australian dollar making a rally towards the upper side of the trend line here. So for USD/JPY traders, it seems like the volatility is dying out after hitting this resistance area here. So this was a pretty important price action level for USD yen. So since the market got to that area, notice what happened. We got some resistance here. Market was unable to break. Then fast forward, yesterday there was a break and the market pulled right back inside the pattern and then up. So from now going forward, it seems like we are entering a consolidation zone, an area where the market is not making a very strong trend. So we could be seeing the curve flattening or the market moving sideways. So for now, it makes more sense to chill out and wait for the right opportunity when the market makes a big move. So for now, I don't see anything much. So if the USD continues weakening, then a potential break might be the likely idea. And if there's a break towards the lower side, of course, as we mentioned, the target is usually on the base of the pattern, so around 147.574. But also the upside is also true. We could be seeing an extension of the rally and the market getting to 150.859. So that's it for the day. We have dollar trading against the Swiss franc. We already had a breakout, so this seems more of a retest. So in this case, we should be looking for a bounce, and if there is a confirmed bounce, then we should be looking for bullish positions. This hasn't played out yet, so it's one of those wait and see to see if it actually plays out. So sometimes the market will make a breakout, pull back, retest the trend line, and then continue in the direction of the breakout. Now seeing a pretty weak dollar. Not so sure of this one. So perhaps look for opportunities that are much more clearer. But if there's a nice bounce, might be a good idea to be looking for a buy here. So New Zealand USD, this is what we are looking at. So it seems like the market is really struggling to extend the drop, especially on the back of a weak dollar. So in such a case, you keep extending your trend lines to track the sideways momentum, because I believe this is a sideways momentum. So what we may end up with here is more of a market that's just trading sideways for a while. So just give me a sec. And we can all observe that this is clearly some form of symmetrical triangle setup, where the market is just moving sideways, volatility is reducing over time, and eventually you will have a breakout. So the breakout determines the direction of the trade. Of course, it's more likely the market will break towards the upper side, backed by a weak dollar index. So when the breakout happens, of course, we should be looking for bullish positions. And that's it for the day. I'll be checking the comment section to see if there's any questions. Respond as we approach the end of the presentation. So hello, Willie Bet. Thank you for joining. Hello, J Squad. Thank you for joining. So a good question. Why is the JPY strengthening today? It's more likely that the dollar is weak rather than the Japanese yen strengthening. The dollar seems to be broadly weak across board, and that's likely the reason why you're seeing other currencies regaining across board against the dollar index. So another one here, this is from Ongari Patrick. What has led to the abrupt strength of the Canadian dollar against the US dollar? Is that strength sustainable, or it will ultimately fade away? So the Canadian dollar is currently pretty weak, and this strengthening is usually as a result of something we have discussed previously, that in these current market conditions where a lot of investors are following the data that central banks are also following, they tend to front run the central banks and act before the announcement of the data. So more of a buy the rumor, sell the news. So a lot of people who are already in short selling positions in the Canadian dollar. And of course, whenever there is news, it's usually a good time to make an exit, which creates an inverted movement. So in this case, you see the Canadian dollar strengthening on news that's supposed to weaken the Canadian dollar, but it's only temporary. Eventually, the fundamentals take root, and we continue seeing the Canadian dollar weakening across board. So the idea is to be looking for a strong currency and pair that with the Canadian dollar. And in this case of such a reaction, you just wait it out and look for a nice position. So another good question here from an account using All Sports TV. Hello. Now that the United Health Company and Goldman beat their earnings, can we expect an outright buy, or there will be some range in the short term? So there has been concerns about the two companies, but now after they beat their earnings, you can already see the overall reaction happening in the Dow Jones, forming a new all-time high yesterday. So it's more likely going to be a bullish day for the Dow Jones index today, following the reports from United Health and Goldman, indicating that the industrial sector in the US is currently pretty strong, and you don't have a lot of firms in the Dow Jones, just 30 companies. So in this case, an overall expectation of a new all-time high is much more reasonable. So as usual, as we approach the end, remember to watch the latest episode of the Bullish Manta podcast. It's available on all podcast platforms. If you're new to trading, remember to go through the Novice to Pro course, which is available on the FX Pesa YouTube channel. And if you are looking to begin your trading journey and you don't have an account yet, check the links in the description below. And if you're watching this on X, remember to visit the FX Pesa page for a link on registering for an account and updates on the current developments in the markets. So thank you, everyone. Thank you for your time. I hope to see you on the next session, which will be happening tomorrow at exactly 11 a.m. So we have daily sessions Monday to Friday happening at exactly 11 a.m. and one special session on Tuesday focusing on the US market open, and it starts at 4 p.m. So thank you everyone, and I hope to see you on the next one. Remember to like and subscribe to the channel. If you're watching this on X, like and a share of the video to reach out to more traders would be much appreciated. Thank you.